Okay, good afternoon, everyone. Right now, I'm actually long crude. We found the major low yesterday, and I can't remember who all got the low. I think I know Chris definitely got it. Anyway, I bought just a little bit too early and then got stopped out with a small stop, one tick above the final low of the day. At any rate, I'm long now from this higher low. This higher low came together just perfectly, and we'll go over that in a second. So let me just show you the reason for the entry today. What has me worried is this push back up. This looks very much like an A, B, C back up, and I almost exited there. If I would have had two, I would have taken one off in here. But this push down out of the high looks like an A, B, C correction to me, and this last push looks very much like an ending diagonal. 1, 2, 3, 4, 5. And if you don't like it as an ending diagonal, well, it works as a double three as well. A, B, C, X, A, B, C. So either way, this looks very much like a corrective low. It could just be the first ABC of a larger correction back down. So the reason I bought this is because of the low yesterday was just an incredible picture perfect low, and the move out of that looks impulsive. So I'm thinking that we're going to be pushing up. So the low that we had right here, I mean, it was a perfect 61.8 retracement for one thing, for a potential wave two. I know crude tends to favor that 78.6 retracement like it did here at this low. But this push up and out of the low and then the correction back into this low looked just incredibly bullish here. So I bought it at 85. I was trying to get in at 79 and basically hit market when it started pushing back up so I wouldn't miss it right here in the 2 minute. And you see the entry right there. So once it hit that low, it wasn't in that low for very long. We had incredibly high volume per second, bullish divergence on the 440, double divergence on the 2 minute, divergence on the 5 minute. And of course, the major low yesterday on the 240 was just an incredible swing low here. And it was a full 78.6 retracement. So I'm curious as to what's going on here. I'm thinking that the potential exists for another high. As all of this, we were talking about this last week, is this the end of wave 4, or is it going to go up and make one more new high up past 56, maybe as high as 59 by the time it ends? And this would all be, either an ending diagonal up or a larger double three, essentially. So that's the question. As far as this push down here from the high, I mean from the low up, the guys at ElliottWave.com would count this as an A, B, C with an ending diagonal for the C wave for a zigzag correction back up. And it's funny, but you can count that same exact thing right back down here. So maybe a less likely alternate, but an alternate nonetheless would be this is somehow we're going into a triangle, and then get one more push up. But, you know, regardless of LA wave and all that, we're trading what we're seeing on the chart, and we had several areas in the market geometry come together at this low. We had a perfect completed wave count down into that low, and then we have a strong push up and out of that low. So I was trading today's low as a higher low, potential wave 2, and essentially I've held through a really deep retracement here. It's, you know, it's not something anybody wants to do, but if you're going to be able to get some of those extended moves, then obviously you'll have to hold through some of the retracements, and a wave 2 or a B wave retracement can come really all the way back towards the previous swing high or low. So unfortunately, I've had to hold through that. I was up, I think, 78 ticks or 68 ticks, and I'm expecting a break of this high. So before I exit the trade, I want to be back above that high, and preferably trading up to the top of its channel, which is even higher, above 50. Really, I want to get above 50.20. And that would be the previous fourth wave high right here. Okay. So that's what I'm looking at for crude. If you want to go over just the reasoning behind the major low real quick. There's a couple of different ways you could count this. But the one that makes a lot of sense to me is that this is your first ABC down into this low, X wave up, and then an ending diagonal for Y. So this mess in here, you've got a, you know, series of threes, 3 down, 3 up, 3 down, 3 up, 3 down. And the only time you have series of threes like that is if you're in a triangle, ending diagonal, or, you know, any type of corrective triangle. And this looks very much like an ending diagonal to me. It is expanding. So it's diverging trend lines from 2 to 4. I'm going to hide these real quick. So if this is 1, 2, 3, 4, and 5, 4 does not come back above 2. And if we connect a trend line from 2 to 4, and then from 1 to 3, we get that nice throw over for the end of wave 5, and the diagonal is diverging. You have diverging trend lines as opposed to what you normally have with converging trend lines. So this would be a little bit rarer of a pattern, but nonetheless, it's provided us with that perfect low yesterday, which, you know, we were anticipating. So, and then the major trend line from way back, and this channel here is really pretty incredible. Look at how this one comes in. Oh, and by the way, this is a Fibonacci time extension, and I'm just taking the high at the starting point to what I think is the dividing wave, the X wave or the B wave, and it's giving me 100% 2.5 hours before the final low. So all of that to say it's a pretty symmetrical type of a pattern. And one more thing, if I connect, let me hide all of that again. If I connect this high, the X wave high, to this protruding kind of fourth wave that I am calling the fourth wave, and bring this to the ultimate low there, that gives us this low pretty nicely as well. Also gave us the high of the day today. But what gives us that low and this high even better is this trend channel right here, connecting from low to low. That gives me the down sloping lower median line, perfectly right there. It also gives me this high, fourth wave high, perfectly before that low. So remember, this trend channel is drawn right there from low to low. And then look at what you get. You get the major high, you get the major low, and then the major high today. And that low that I bought came in on that center median line right there. I want to say it was this one. No, it was on the tick chart, the upsloping lower median line, why I got in there. But anyway, that's crude. I'm thinking a push back above 50.20, and I'll look for an exit for this trade. I mean, I had, I think it was a 9, it might have been a 10 tick. It was a 9 or 10 tick stop on this entry. I was trying to pick one more up at 79, and it never happened. So the combined stop, once the trade was averaged, would have been, I think, about 7 ticks. So if I can get 100 ticks out of that, that'll be a 10-to-1 reward to risk, which is always lovely. All right, so that's crude. 6E, I bought the low here today, and then took one off here, and then it came down and stopped me out of the second one, pretty much to the tick, and then it's continued to move up. So what I'm looking for in the 6E is a move back up into here, at which point we could potentially get short. I was thinking that one more high is possible, even likely. Excuse me, but looking at this, I do have the higher time frames for this. Let's go over this. We'll go over the weeklies and the dailies real quick first, just to kind of recap what we did last week. We were talking about putting in a lower high, I think, last week. I was actually, on Friday, I was long right here. Let's look at that real quick. And then everybody was reminding me that that French election was happening. So I was long from right here, thinking that this was a potential fourth wave, right? So this was a leading diagonal for 1 right here, and then wave 2, and then a perfect 5 for wave 3. I mean, this is a picture perfect Elliott wave, just like we've been seeing a lot of lately in a lot of different markets. But I was counting this as a potential fourth wave, and it was right next to, almost entering into the territory of the previous wave 1. So I was thinking, well, the potential exists for, and I think what I was favoring was that this is an A, B, C, and this is potentially the first wave down, although this counted better as a corrective low. So it was a perfect corrective low, and I went ahead and bought it. I was thinking, well, maybe that's A, and then we'll get B, and then C. But anyhow, I bought that as a perfect correction, and I was thinking about holding it over the weekend, but then, you know, the French election and all that. So I went ahead and got out, and yeah, it gapped up huge, but, you know, it could have gapped the other way just as huge. So it was obviously good to exit that before, you know, going into a weekend of an election. So at any rate, it did come up and it broke the previous high. So we were thinking, okay, well, this is potentially the end of the C wave correction, you know, on the weekly chart, daily and weekly chart. And this is maybe wave 1 down, and that we were doing a correction back up. And after gapping up Sunday night and then starting the day on Monday at new highs, all of that has changed. Now, the only other option that we really have if we're going to maintain a corrective count is for a W, X, Y, and that would be our last A up, B, and C. And this A up is a perfect 5-wave move. So I think this is it. I think this is a good count. It may come up and do one more slightly higher high, and we'll go over that. But this is that, you know, everybody was watching this big trend line. I mean, anybody who's got any sizable account was looking at this big trend line on the weekly chart in the euro. And we see a perfect ABC right back up into that trend line, right back into the top of this upsloping channel, right? And then it rejects huge, really quickly, right down and out of that high. And now we've gapped up above that trend line, which is interesting, huh? On an election, which hasn't even happened yet. It isn't the final election, May 7th, French election. So really, it's just, you know, bum news. It really has nothing to do with anything. And we've gapped above the most important down sloping trend line on the chart. So for those that, you know, trade trend lines and breakouts of trend lines and all that, blah, 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 you've got a lot of people buying long here on a break up of a down sloping, you know, major trend line on the weekly chart. So a lot of buying, a lot of money is coming in and buying this, thinking that this is the ultimate low. And it may be, it might actually be, but I think we have one more push down and out of it. So the previous major wave was a triangle, and that's the penultimate wave. I mean, a triangle is, you know, the wave before the final wave, but this push down is not counting complete. So if we can stop here, put in a high, cycle all these people out, and then work it back down, that should provide a huge, very quick move once all these people start exiting their trade from up in there. So we've got a ton of volume that's come in this week at these highs. I mean, you can see it on the 240-minute chart, just looking at the average volume, how it's rounding up at the high. Yeah, it's about a 61.8 retracement here, which is not really what you would expect for wave 4. You would expect wave 4 to stop at 50 or thereabouts, but I'm thinking this is 1, 2, little wave 2, and then big wave 3, and then just a long and drawn out fourth wave, and we're going to do one more wave down. Okay, so that's the euro. And you can see we've broken up and out of all those down sloping channels. So quite often those fail. You'll break out of the really most obvious areas and then stop immediately and reject right back down. Just like, you know, a typical fake out breakout. A lot of people trade breakouts and trend following systems and all that kind of stuff. And breakouts tend to fail more often than work out. So I think that's what's happening here. Now, all of that being said, we may come up and make just a slightly higher high before we finish this thing out and actually come up to 99.30 or thereabouts, 99.20 to 40, let's say. And that's about 130 ticks from where we're at right now. So let's kind of go over the 240-minute and look at the areas here. So we had nice double divergence at the low here. I mean, we had incredible, perfect swing high at the high there. Triple divergence. But we don't have any divergence at all on the 240 here, but we do on the hourly. Now we have double divergence on the hourly up here, but anyway, that's out of a major gap up. So it's a little bit skewed on the 240-minute. As far as a complete 5 up, you could say you have an extended wave. So this could be counted as complete. And that could be 5 right there. I mean, you know, we're talking about a gap here. So we're kind of missing the third wave, right? Let's just see some relationships here. Yeah, it's kind of looking a little funny because of the gap. So anyway, if the high is in, well, we all shorted, or I didn't, well, we talked about it and everybody else shorted it, but I was too scared and I wanted just 3, 4, 5 more ticks right here. But that move yesterday, so out of the non-farm payrolls, or what was it? I guess it was, yeah, one of the unemployment numbers. Anyway, it came up and it worked into that high perfectly and then shot right down, okay, and then stopped on a dime, and now it's come back up in what looks like an ABC. So this morning, it looked like we were just going to keep on going. I mean, we had a huge, wide-ranging bar, and what was that on the hourly? Let's look at it on the hourly real quick. And we hadn't quite broken out of the previous high yet. Yes, we broke the news high yesterday, from yesterday. So this morning we had broken that high. And a huge wide-ranging bar like that tends to be about the midpoint of the move. Occasionally it will be, you know, the end of it. If it's a huge amount of volume, you can get that buying climax that stops on a dime and then completely reverses. But oftentimes it's about the midpoint of the move. So the retracement down here, in order to count this, is a 1, 2, 3, 4. You can't really do that now. We've come back inside of wave 1. We didn't close inside of it on the hourly, so you know, technically I guess you could allow that, but it's getting pretty sloppy now. So what I'm thinking is, rather than that, it's looking more and more like you've got your wave 1 down here, and that is 2 up. You don't really have a wave 4 in there though, so you know what it would have to be would be ABC up for W, straight shot for X, and then ABC up for Y. So a double 3. Just a sloppy looking correction here, and it's retraced what, like 90%, 95%. So I think that's what's happening, and what I'm going to do is set up for a short trade. So depending on how we open up on Sunday night, I think we'll start to move into this area, likely put in hopefully a full retracement, but hopefully at least a 61.8, but preferably, you know, up to at least this down sloping upper median line, and find a spot to get short. So that's what's happening with the euro. If it's going to go back up, then I want to see it make it back up to 90, 20 to 40. And that's just slightly above the high. So basically back up to this area here. What is it? I think it's 99. Yeah, it's 99, 20 to 40. So that's a little bit above this baseline from high to high. And that would be right back into the areas on the daily and the weekly chart. And then you would have what's likely the C of that Y wave and the end of that giant 4, after which we should be going down for the final wave down. And then at the end of that low, once we reach, you know, parity or close to, we'll likely make a decade low and turn up into a major bull market and a bear market in the dollar. So we are closing any second, and I am going to hold this one over the weekend in crude and give it a chance to you know, let the trade work itself out, let the trade do the work, and get on up. So we had a huge churn bar there, massive volume per range. It's a really strong sell-off into that low though, so I'm kind of curious what's really going to happen here, but I guess the main issue is the fact that this looks like an A, B, C, and that's a little frightening. Anyway, I want to get back above this high before I exit, so either I'll get stopped out and let me see, I think that was a perfect 61.8 retracement there as well. Yeah, it was a little bit through the 61.8, so I might allow, I was going to say I might allow a full 78.6 retracement, but I don't think so. I'm just going to put my stop probably up behind this low when we reopen on Sunday night. So, and I'll take the risk of gapping on Sunday. I'm not worried about that. I've done this several times, and occasionally, yeah, it may gap against you, but more often than not, when it gaps, it tends to gap in your favor if you're already in a trade. It tends to, you know, gap with the direction for the reason of the trade. So if we're thinking this is a major swing low, and it looks like it is, and I bought it, we've moved up off of it, made another higher low, the gap out of something like this will tend to be in favor of the trade. So it's worth the risk to me. You know, I bought this, and then I had a 5-tick stop on it, and I basically jumped into it after seeing this major swing low here, this huge extreme churn bar, and it got me out to the tick right there. So we were talking about this before we closed the trading room, and we were calling the previous low the low of the morning. Well, that was evidently a psych out. It went back up, it broke the previous swing high here, but then it came right back down and made a new low. So let's check that out. The major area that we had was this upsloping trend line. All right, so this is, yeah, let me go over that, because this is kind of the same thing we're seeing on the weekly chart of the euro. You draw in the trend line, you get rejection from it once, it goes like it's going to go back up to new highs, and then it breaks through it. And when it breaks through it, you've got people jumping out of their longs, and you've got other people getting short, right? And then it stops on a dime and comes right back up inside of the channel again. So you see this quite often, and typically what you're doing is you're just putting in a new slope. You're just changing the slope of the channel a little bit, and you're putting in a new channel. So now we have potentially, unless it comes lower through here, we have a new slope that we may end up using. So rather than making it to the top of this larger channel again, you know, we may potentially only make it to the top of this channel and then turn back down. So that's one of the things with market geometry that's important to understand. A lot, you know, when you're in a really strong trend, the first break of that trend line is typically not the important one. The first break or two tends to be, you know, you're just making a slightly less steep of a channel. All right, everybody good? Everybody was able to get in now? I don't understand why. Maybe it was just because the link in the hip chat was different or something. All right. So let's see. At the high here, I think last week I was looking for what would be potentially a corrective wave high here. A, B, C, X. No, it would have been here once we broke above this wave. So if you go back and watch that recording, I was looking for a break of this high to put in the end of a correction. Well, it gapped up and then it never looked back. It just kept right on going. I think this, that slow grind of a day, a couple of days, was right on this channel. Yeah, you see. So we broke out of the top of that channel through the gap, and then we rode back and forth between the broken auto line, the broken channel line, and the new channel line, and then just kept on working higher. So by the time this started working itself out, we ended up putting in a really beautiful, perfect corrective wave here. Let me see if I have that. Just to show you how pretty it was actually. Yeah, right here. There it is right there. So this was at that low, and we had a really nice A wave, obvious A wave. It's a zigzag with an ending diagonal for the C wave, and then a perfect triangle, perfect running triangle, and then another nice 5 waves down. So that's about as obvious as you're going to get for a corrective wave that traces out a perfect channel like that. Just a nice double 3 into that low, and that low was this low right here, and I was counting that as a 4th wave. All right, but the 4th wave from here. So this would be one big 1, 2, smaller 1, 2, and then an even smaller 1, 2. So basically an extended move to the upside. That's likely going to keep going and going and going. So we've got wave 1 and 2, and then 3, 4, 5. So this was the 4 that I was just counting here. This is a close-up on the tick chart from this high to this low. You see the triangle in there. And then from that low to the high, you've got 5 is perfectly equal to wave 1, and that's your typical main relationship. 5 is equal to 1 more often than not in an impulse move, okay? Either it's equal or it's 61.8 of wave 1. So that's, that confirmed very much that that was all one section of a wave. That was all, 5 waves within one completed impulse move. So if that's the case, well then we've got 1 and 2 here. Then we're looking for a larger wave 4, which I am thinking is right there. I was thinking before that it was potentially right here, but now that I'm seeing it, I think it's right here. So what we've got is a retracement down out of the high that looks like a really nice correction, but typically wave 4 will come back into the previous wave 4. Well, it hasn't quite done that, so kind of had me second guessing. But anyhow, if this is the end of the larger 4th wave of one larger degree, then the move up and out of this will likely be related to this wave up here. And that's coming in about 56.26, 56.27. And that would also take us back to the top of some of those other channels. So I'll leave that one, but let me delete some of this stuff in here. So let's zoom in on that a little bit. Yeah, so that low here was looking like this was an A, B, C at 5 waves down into that low. Well, you got to bounce out of it, but then we've come even lower here. Now we're still finding support on that median line. So Still a pretty good area of support. Let me look at that a little more closely here. Okay, yeah, well, this makes even more sense. So the problem I had with this being the end of 3 was that it doesn't quite count as perfectly as I would have liked, and it counted better here. So if you don't think Elliott wave is that useful, well, just pay attention a little bit, and you'll start to pick it up after a while. But I mean, it takes a lot of work to learn it thoroughly. But it's one of the main reasons why I'm able to consistently grow an account is because I have a pretty solid understanding and am able to use Elliott wave effectively. So it can be difficult, but it's also incredibly useful. So what we had here was an obvious triangle, right? It's a completely obvious triangle, standing out pretty good. So we've got an obvious fourth wave there. And out of that low, we've got a 1, 2, and a 3, but not a 4 and a 5. So the 4 and the 5 is another triangle that ends here, and then wave 5. So this is making much more sense as a completed correction. And I'll show you why. We've got 1, 2, 3, triangle 4, 1, 2, 3, 4, 5. And that's our slightly truncated fifth wave, meaning that it didn't quite break the high of the third wave. And that was, that's a huge, what was it, Amazon earnings or something. So there's your perfect triangle there for the fourth wave. And well, I won't try to finagle it, but this is basically your triangle for fourth wave of 1 smaller degree. So out of that, if you're looking for a corrective low, what are you looking for, right? What are all the different types of corrections? Well, we've got a zigzag, which is a 5, 3, 5. It's a pretty common one. What do we see here? 5 down for 1, 2, 5 down for 3, 4, 5 down for 5. We got an A, looks like a little triangle B, and then a C, so that's looking like a 3-wave move up. And then what do we have down here? One, 2, 3, 4, 5. And that's our A, B, C. Not quite 61.8, but pretty close. And look at the support that came in there. So you've got pretty strong divergence. I mean, that's, pretty strong divergence. The low here is much higher than the low here. So obviously you had pretty high momentum move down and then some sideways overlapping action in here. So this is looking very much like the end of a correction, and look at all of the demand that came in at that low. So as we're coming down, we get a selling climax, increased volume here, big wide ranging bar, and then what's the next bar? Narrow range, high volume per range. If you're seeing that at the end of a move to the downside, you're seeing demand come in at the low. That is evidence of demand right there, coming into a low. Yeah, it's, you're in a sell-off and it's going down, but at this point it's going down. It's taking much more volume to move the market every tick further down than was necessary to move the market down here. meaning that you've run into some, people holding their pockets out, holding their bag open, absorbing all that selling, buying it up, building a long position. And by the time I saw it, it was here, and I went ahead and jumped into one there, thinking I was going to miss it, which is why you don't jump in, which is why you wait for it to reach the area before you take the trade. And anyway, I didn't have my stop set properly, so I got stopped out to the tick at the low there, and then now it's moving up. So what I'm thinking is up to new highs out of this low. This is a fourth wave low, and we're going to keep moving higher. And that's your first area of resistance where you would expect resistance. And it has knocked it sideways into the close, so we'll see what happens. Any questions on any of that? Curious about this hourly chart real quick. Okay, we have come to the updating midline. So these channels that I created are auto updating. You see the auto line split here, it updates, auto line split here, it updates, came back to the top of it here, and now it's pulled back to the midpoint of that channel. So it's like a running 50% retracement. It's the midline of the channel. And it's also the original shadow line, it's a shadow line of the original channel. If this is the original channel and it was split there, that's the shadow line of the original channel. So we found support on that here, actually came through it here, although the ultimate low was, the ultimate previous fourth wave low was right here. This is actually a higher low. And then we found resistance at the high top of that channel. And now we have found support once again at the midline of the channel and the shadow of the original channel line. Market geometry is pretty incredible. All right, what else? So we could move up as high as, let's see, the value of that. $56.32. So that could be the next fifth wave up. $56.26, $56.27. So let's say $56.25 to $56.35. See, that's the channel we've already made it to the top of there. See, not quite though, we just barely missed it. And then we back off of it. So now we've got plenty of room to make it back up to it again. So just keep that one in mind. From the low here, it's probably best if I use this low. Let's see the difference. Yeah, I'm going to keep both of these here. So those two are, not too much higher. That would be your first target anyhow, would be the 61.8 of wave one. So that's at 56.05. 56.05. So be mindful of that. I imagine you'll probably get some kind of extension up through that though. So that's the Nasdaq. Yeah, pretty high density bar right now into the close. The really high density of that little swing, though, was right at the low, which you can see on the 5-minute that we talked about. So looks like a lot of demand coming in right there at the low, which would be this low here. And you see the extreme spike on the tick chart. So very high volume per tick as well. So some people with some deeper pockets are coming in there. You see the exact bar that made the low was the huge relative volume there. And of course, you got the high volume into the close. All in all, today it was fairly low volume though. All right, so gold and then we're done. Okay, so I had bought this in here actually. Where did I buy it? Bought it last night. I think I'm missing some data here. Ooh, yeah, I am missing data. And if I reload it, it's gonna mess up the entire chart. Yeah, I bought a low in here and I'm missing that data. Well, it's not all that important where we're at right now, but basically what I've been thinking is that this was a corrective move back down out of this high. The problem with that is, as you guys remember from last week, I'm sure, that high that we had in gold was at probably the most obvious, and I was probably I think it was 7 or 8 different areas coming together at this high. So it was just an enormous confluence of areas in the market geometry and fibs and everything else. The major trend line down on the weekly chart comes in perfectly at that high. And at that high, you've got that 2-bar pattern. It's also volume divergence, but you've got your incredible buying climax, big buying climax followed by a narrow range turn bar. So, and you gap into it. That was Sunday night. And we've been going down ever since, but we've been going down in what appears to me to be corrective price action. So it looks like a nice A, B, C, X, A, B, C. Oh, I'm missing all kinds of data. I'm missing a lot of data in here too. So weird. I don't know how Ninja does that, but anyway, I need to reload it. But if I reload it now, the charts are going to go blank and I have to restart Ninja. So at any rate, this low looks to me like the end of a double 3 down. So I was thinking, well, even if it is going to go down to new lows, and this is somehow just a series of 1, 2, 1, 2, and then maybe another big 1, 2, I was thinking we would at least go back above this high. So that's why I had bought long. And I took one off. Let's see, when was that? I don't remember, but I got stopped out of the second one this morning. After the report, it came down pretty low. Somewhere in here, I think. So anyway, yeah, it did move back up after that, but it's kind of looking pretty weak in here. I mean, this was a strong snapback out of this low, which made me think that, okay, well, that's, you know, the confirming impulse move up and then the sideways move down right into the lower median line, upsloping lower median line. was the perfect correction back down out of that high. So I was thinking, okay, well then we'll get one more new impulse to new highs, at least, even if it's an ABC. So I was thinking, well, at least make it back up into here, which would have been a great trade, but I just got ticked out of my second contract in here. So ultimately I'm favoring a move to new highs, but until I see what's going to happen in here, I don't have a whole lot of faith in that happening, just because of the sideways kind of, it's not the way you would expect a third wave to start. You would expect a nice big push to the upside, which we did start off with here, but then it's just kind of gone sideways. So I'm expecting, for now, as far as the wave count and everything, and a move to new highs. I'm just not so sure that's going to happen. So don't have a lot of conviction, in other words. So I wouldn't doubt, I'd feel pretty comfortable with making it back up into here, 75. But if we put in a strong high there and then turn down pretty quickly, I'd be looking for a move back below this low. All right, guys, that's all I've got for today. Anybody have any questions on anything? Yep, you're welcome. Okay. All right, well, everybody have a great weekend. Good luck next week. All right, I'll talk to you guys in the trading room Monday morning.